Hello again, everybody. It's Harry Boxer, the Technical Trader, Monday, August 30th, and these are the charts of the day. Today, as is typical of late, we're going to go over some of the Boxer shorts more in details, particularly with today's ugly session and the extremely negative close. Starting with AFAM, you'll see that the stock remains in a tight coil type pattern near the apex of that coil, also at the declining tops line of a pretty ugly looking down channel here. That was been in force since the beginning of May when it started its descent. It cracked hard in June, fell very hard into mid-June, July, and then bounced and backed off. Now, if this thing breaks here, you're going to see this roll over hard, maybe into the high teens, and that's where we'll set our trading target. Ametasys, AMED, looking similarly to AFAM, has also come down hard, gapped, wedged, gapped, and then set up a big consolidation here. They're also near the top of the declining channel. A drop here could run this into the high teens as well, maybe even down to 17 range. That's going to be our intermediate target, short-term target around 20. CPTS Conceptus is forming a coiling type pattern with very poor technicals, has moved back up to 14 level from 12 recently, and then is currently in a declining channel mode. Drawing a line across the tops, you'll see that's the angle of descent, but we may see the stock have difficulty getting through this level and roll over. If that is the case, target at 11. CRE, looking pretty negative here, is in a declining channel after breaking through key support recently. Bounced back, but is fading, and with technicals as poor as it is, I would not be surprised to see the stock lower. I have a trading target in the high 40s and then in the low 40s near 42. City Trends, another retail stock that's looking pretty ugly these days, broke this big wedge pattern, came down hard from the mid 30s to the low 20s recently, bounced, but has formed a bear flag here. This bear flag looks to me like it's headed south and lower. There is some support around 21. Beneath that, around 17, I'm going to look at call 21 and 17 our short and intermediate term targets. Quest Diagnostics continues to look lousy. After breaking down here and forming a bear flag, it spiked down in July, formed another bear wedge, and has been moving steadily lower in the past couple weeks, week and a half or so. Bottom of the channel down around 40 is my trading target. Beneath that, around 37. FTI Consulting, FCN, broke hard with a big breakaway gap to the downside in early July. Snapped back to the, or should I say, moved back up to test resistance at the gap. Tested it again and failed, and now has been moving steadily lower. If this begins to accelerate down and takes out 30, I'd look for something in the 27-28 zone. Another retailer, Guess, broke hard just recently and has been headed, and it looks like it's headed south on big volume. This major channel bottom is down around 26.5. I expect that to be tested once 30 is taken out. That's our short and intermediate targets. GPN, in a very negative declining channel for the last 7 or 8 months, currently in a wedge formation right beneath the declining tops line, the moving average. A break here should get it down into the 33 zone at the bottom of the channel and then beyond. IPCM, also in a down channel since the March-April highs, January-February highs, I should say, when it was trading up around high 30s. Came all the way down to 21, bounced, backed off, and been bouncing and consolidating, but wedging in this area. Note the declining tops line and moving average here has held it back, and a breakdown below 22.5 could lead to a spike down that takes us down into the high teens, my trading target. JCG, JC Crew, another retailer that's looking ugly, broke yesterday, on Friday I should say, and followed through with another 78-cent loss today. Looks like it's headed for 27.5, 3/4, where there's a major support level. Beyond that, potentially down around 22, my intermediate target. JDAS, JDA Software. Topped out in this spring, broke hard in June, snapped back to resistance at the end of July, and then came down hard, bounced, and here's forming a little bear flag right near the declining tops line and moving average. A break from this wedge to the downside could be disastrous and should lead to something in the high teens, perhaps. MR Mindre Medical, after cracking hard earlier this month, has formed a beautiful bear flag. Needless to say, has downside potential from that pattern right there, and a break could get us down to the 22 zone. And beyond that, something around 19 potentially doable. Another retailer in trouble technically. Blue Nile has come down hard from the mid 60s to the low 40s, but 3 weeks ago broke key support and has been doing nothing but forming a bear flag since then. Looks like it may be headed lower, but if this cracks, look for a move down to 36, and beyond that down to 31, 32. Solar Winds, SWI, broke a massive top formation, gap down, snapped back, nearly filled that gap, but then formed a bear wedge. If this breaks to the downside, look for a retest of the lows at 12, and beyond that, something around 10.5, 11. Universal Corp, the tobacco company, broke hard in May and early June. Took about 6-7 weeks to snap back to resistance. Rolled over hard in early August and now has formed a bear flag. Looks like a move down to 32, 33. Short term may be doable very quickly. Beyond that, something around 29, 30 on an intermediate basis. And finally, Visa, which came down very hard in April and May, bounced in June and has then narrowed and formed a kind of descending wedge, is sitting right on top of key support that, if broken, could lead to a very sharp, quick decline from just under 70 to down near 61, 62. Beneath that, something in the high 50s may be doable. There's some pretty ugly charts for you to keep an eye on. Talk to you later.